AIG, formerly a great American company, has taught us some very expensive lessons. We now know how dangerous an unregulated market for financial derivatives, in the case of AIG, credit default swaps, can be. We now know that lax oversight of large financial institutions like AIG can threaten the very financial fabric of America. And we now know that our regulators need stronger tools to put large financial institutions into receivership when their failure threatens the economy of our country. Just last week, Secretary Geithner testified before Congress and put forward a plan that would allow the government to handle big firms that are failing. Chairman Bernanke testified that he believed a receivership would have been better for AIG than the present mess that we're in, and he testified in support of this legislation. And I'd like to ask you, do you believe if we had had that process in place, a receivership would have been better for AIG and the American taxpayer and the economy?
Thank you for that question. Given the terms, the original terms that the government gave AIG for $85 billion of a loan, which funneled money almost immediately out the back door to counterparties, charged 14% interest, and took 79.9% of the company. Clearly, everybody would have been better off, in my judgment, if they had declared Chapter 11.
And can you explain to us how would AIG be better now if they had been in a receivership or Chapter 11?
Well, there probably would have been dip financing. There would have been a restructuring of the company. I presume that AIG FP would have been walled off. All the counterparties would have been general creditors. They would not have gotten anything like the collateral that they did get. Remember that the CDOs that was underlying the credit default swaps were not in default. It was the collateral that was required, and the fact that they may have had lower marks on the CDOs, but they would have been general creditors.
Well, thank you for that testimony. It's very important coming from someone with the experience that you have. Could you also comment on a very important plan that is before Congress now, the Treasury's Toxic Structures and Toxic Securities plan, the so-called buying the toxic assets with government financing, providing on very generous terms. So the threat may be, some say, that we'll end up handing big gains to private investors at taxpayers' expense. What is your feeling of the toxic asset plan?
Well, you know, what I do know about it, so far it hasn't seemed overwhelming to the market. It's only going to be successful, if there's an awful lot of buyers who are going to buy in, and yes, it will provide the banks with getting rid of toxic assets, presumably at a better value. But so far, it hasn't really stirred up a great deal of buying interest. It may be early days, but there's no question that the banks will be the beneficiary.
Some have said that the main challenge we're confronting in getting our economy moving forward is lack of liquidity, lack of credit, lack of movement, and some have said maybe it would be better if our dollars, our federal dollars, taxpayers' dollars, went into institutions that will lend, community banks, regional banks, small business banks, whatever. Get that money out into the community and help the economy moving. What would happen if the dollars went in that direction and the toxic assets were just allowed to remain on the books? Look, why can't we just leave the toxic assets on the books? What would be the better approach? To put our dollars into buying up toxic assets, or put our dollars into pushing credit out into the communities across America?
Well, I think we have to solve both problems. I do think that credit, the availability of credit is, or the lack thereof, is a major problem. And I think getting funds to the small regional banks and community banks that would lend would be very, very desirable. But I do think we need the large banks as well. I don't think it's an either or. I think it's important to do both.
And we cannot leave the toxic assets in the bank's books. Why can we not just leave them there?
Well, it depends
until they mature to the value that they say they're really worth.
I think it depends on what you do with mark to market. If the bill that is now not a bill, but if FASB, who's considering mark to market as we sit here today, modifies mark to market accounting, it will have an impact on the value of the so-called toxic assets and not have to carry them at these low marks. The same is true, incidentally, for the life insurance industry. Mark to market has had, or what you call fair value accounting, has had a very, very dramatic effect on our financial system.